Yeah, hello and welcome to another update video about Quant QNT, $167. I'm happy with that. Yeah, we have fulfilled the minimum requirements in an ABC pattern. We talked about that in previous videos extensively. Can it go down still lower? Of course it can. This could just be a fake out at the moment, but it is starting to look interesting, especially with that breakout of the channel, which is literally just happened in the current hour. That's the first signal that we need that the downtrend could be over. We had two possible entry points for Quant. One was here when we hit the target area first. One was here when we hit the target area again and even broke slightly into it, made a lower low, then wave A. In the previous video I told you that this is a good thing. What you ideally want to see is a wave C going below a wave A, because this is the more likely pattern that gives you a higher probability that the correction could be over at any moment, because as long as you don't see a lower low in wave A and you then start to move up, it would be a rather untypical pattern. So having an ABC correction with a lower low in wave C is good. I would still like to see, to be honest, a lower low, yeah, because we've really only touched the target area now a few times. And this, by the way, is the target area for this larger wave 2 after we have made this wave 1 to the upside here, all the way up to around $229, $230, yeah. Here in this area, I told you that it will probably come down into this area. We have done. But I would really like to see actually the price to go down a little bit lower. Either way, I'm prepared, and you should be prepared as well, as we talked about this on this channel, that at the moment when you reach this target area, the minimum requirements for a wave 2 correction are fulfilled, right? So if we just draw the fibs again, you can see that here this target area is spanning, yeah, all the way here from $157, yeah, to the downside. But I'm on log chart for some reason. Oh, that's good, yeah. From the 50% fib level, yeah, all the way down to the 78.6% fib level. So from that point of view, this is all okay. We've reached the minimum requirement. The 50% fib level is sort of the first key support level for a wave 2. A wave 2 can be very shallow. Yeah, a wave 2 can also just go to the 38.2% fib level, but then, you know, how reliable is it? So I'm always waiting for the 50% fib level, at least most of the times. And now we start to react. And the fact that we've now seen a break out of the channel is certainly interesting. Now, the hourly candle, let me just go to the hourly chart. I think the hourly candle, yeah, it hasn't closed yet, yeah, but we are currently above this channel. And as I said to you, I did personally take profits at $185, yeah, just before we had this sort of short escalation, which some people still bought, yeah, surprisingly. But I did buy, I took profits here in this consolidation. Yeah, maybe should have waited, but in the end, you know, I'm happy with that. I took 50% of my profits, made you aware in this video. I then bought again at $165 a few days ago. So I'm prepared for another move to the upside, but also I didn't buy in massively. So I'm also happy if we come down lower to accumulate in the region of the next fib levels here around $141 or $117. So either way, you know, I'm pleased with that. My entries and exits were strategically positioned so that I have the greatest flexibility I want, also in terms of position sizing here. So at the moment I wouldn't here, you know, get too excited about this, because yes, we have broken out of the channel, but the hourly candle hasn't closed yet, so there will still be half an hour of sort of time to get back into the channel. Then we are still below the 20-day moving average. This is the white line here that you can see that's actually at around $175. There will also be the next serious resistance on the way up. Then we are still below the low of the wave E, that is at $179. That would be the next key resistance. We would need to break above $179 to, well, basically move above this, yeah, let's say this high at $179 above the wave E high, because as long as you are below the wave E high of the triangle, it means you're technically, you could still play out this current bearish pattern, yeah, in a wave C. But a break above that would already be a good sign. And then if we talk about further resistances, we're talking about the $195 level, but then we've already rallied quite a bit. So at the moment, this is all looking good. There is a realistic chance to move higher, and there is also here on the lower time frame a possible 1-2 setup that we can identify. Wave 1, 2 to the downside, and this could be a wave 3 to the upside. But again, we've only got 3 waves for now, and it will be interesting if we get 5 waves. That's the first point that's interesting. And then how will the next retracement be? If we get 5 waves up now, that we've broken out of the channel, 5 waves up and then 3 waves down, and we're holding the 78.6% retrace wherever it will be, because this rally doesn't need to be over yet, so we could still push a bit higher. But let's say it is over, then we need to hold the $157 level, the 78.6% retrace, because if we go below this, then it will again be a big risk of breaking down and making new lows. So yeah, we are currently in a possible reversal, absolutely. But at the moment, we haven't really made any higher highs. We are still making lower highs here. Yeah, but yeah, you know, this is the first key breakout that we've had in a long time now, for weeks at least. So let's see. It can turn around. Yeah, this has been possible since the moment then we've hit the 50% FIB level here. So yeah, now it is a little bit of wait and see. I'm positioned, I'm happy, and you might be as well, I don't know. So yeah, I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.